Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Global markets rallied for the third consecutive week as sentiments remain positive amid receding fears of immediate financial sector worries. Major global equity indices continued their positive streak for the third consecutive week, with the MSCI World and MSCI Asia ex-Japan indices up 3.7% and 1.5% respectively, while in the US, the S&P 500, Dow Jones, and Nasdaq Composite indices were up over 3% for the week. Back home, Indian equities started the week on a cautious note, but rallied later in the week amid positive global cues and strong domestic and foreign investor buying. The Nifty index rallied on Friday, recording its highest single-day rise in over 4 months to post a weekly gain of 2.4% over the holiday truncated week. Broader markets underperformed Nifty this week, with the Nifty Mid-Cap Index up 1.6%, while the Small-Cap Index was up 0.8% for the week. Among sectors, banks, IT and metals were the best performing sectors with gains of over 2.5%, while the telecom and utilities were the worst performers with cuts of over 1%. The Indian fixed income market had another good week as bond yields remained stable across maturities. Strong retail demand through mutual funds kept the bond yields well anchored despite rising US bond yields, while cash yields remained under pressure. The RBI published an indicative borrowing calendar for the first half fiscal year 2024. The Government of India will borrow INR 8.9 trillion or 58% of the budgeted plan, while the states will borrow INR 2 trillion during the same period. For the week, the 10-year Indian government bond yield remained flat at 7.31%, while the 3-year and 5-year Indian government bond yield rose by 0 basis points and 3 basis points respectively. The INR appreciated against the USD amid improving foreign investor flows and a weaker USD. For the week, the INR rose 0.4% to close at 82.2 against the dollar. Among the other key updates for the week, first was on India's current account deficit for the period of third quarter fiscal year 2023, which narrowed to USD 18.2 billion or 2.2% of GDP compared to USD 30.9 billion or 3.7% of GDP in the second quarter of fiscal year 2023. The sharp improvement in current account deficit was led by 1. Robust services surplus, which rose to USD 38.7 billion, and second, lower trade deficit, which narrowed to USD 72.7 billion from USD 78.3 billion in the second quarter of fiscal year 2023. For the period April to December of 2022, India's current account is tracking higher at USD 67 billion or 2.7% of the GDP compared to USD 25.3 billion or 1.1% of the GDP over the same period last year. The second data was on India's core sector, which grew at 6% in February 2023 compared to 8.9% in January. All sectors recorded a sequential moderation in output growth except crude oil production, which declined 4.9% year-on-year. The third data was on India's fiscal deficit for the period April to Feb of 2023, which stood at INR 14.5 trillion or 82.8% of the budgeted estimates for fiscal year 2024 compared to 82.7% for the same period last year. Total expenditure stood at INR 34.9 trillion or 83.4% of the fiscal year 23 budget estimates. Total revenue collections stood at INR 17.3 trillion. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.